Hello, friends. There is an old saying in Wall Street, volumes precede price, which means volumes actually come ahead of the price of any traded security, a stock, a commodity, index, or a currency. But do traded volumes have an equal importance at all times? And should you be assigning similar weightage, similar priority, and similar importance to traded volumes at all times? I'm Vijay Bhambwani. I've been trading these markets for 3.5 decades, and through my videos, I want to help my online family, my friends, and followers to become better traders. So, here goes. In this video, I want to tell you that volumes are extremely important on the way up. When prices are rising, they have to be accompanied by higher volumes. In a recent video, I had talked to you about what bear markets are. I use the words bear markets are like diarrhea, they fall quick and dirty, which is what George Lane, the father of stochastics oscillators, said. Now, just to recapitulate what I said then, when markets are going up, they are encountering a lot of resistance. Number one, limitation of resources of bulls. Number two, selling pressure by people who've had enough and they are booking profits or maybe even bears. And number three, forces of gravity. You can check out the center of gravity oscillator. It will help you understand what I'm saying. So when you have to fight, you have to put in a lot of energy. Think of a car that is climbing a slope up. You really have to put the car in lower gear and step on the accelerator for the engine to generate a lot of torque so the car can move forward ahead. Similarly, stock markets and all financial markets for that matter need a lot of buying momentum, a lot of trader participation to push prices up against these three forces of resistances. But what happens when the market peaks out and it starts to fall? A couple of things, some financial, some from the behavioral finance point of view. Number one, people tend to be optimists. So they hold on to a stock even when it is falling and say, look, this is a healthy correction and I'm going to hold on. I might even average some more. But since they are holding on rather than buying immediately, volumes tend to come down a little bit. Some are absolutely shell-shocked. They are like deer frozen in the headlights of a car. They fail to move fast. That includes traders, which is why a short-term trader invariably becomes a long-term investor because he could not get out on time. His nerves broke, he froze, and therefore volumes come down. Thirdly, the force of gravity itself pushes the price lower. So on its way down, when the markets are really falling, volumes need not be as high as they were on the way up. Of course, if markets are falling on higher volumes, that tells me that one Marshmallow traders who are actually intraday players, are actually pushing sales and they are participating, they are profiting from the selling process, which means the selling is a lot more forceful. Yes, but if at all prices are falling sharply on lower volumes, all it tells me is, look, a lot of guys who are holding on to their stocks are still holding on to hope. And that hope might be crashed. They might just sell at a far lower price when the pain becomes too unbearable for them to hold on to their stocks any further. That is why I keep telling you, keep monitoring the MWPL, the market-wide position limits, which is the extent of exposure taken by a trader as a percentage component of the entire exposure allowed by SEBI. If the MWPL is too high and it remains high even on the way down, that means traders are still smoking hope OPM, right? That MWPL will be surrendered once the mark-to-market losses become unbearable. That by itself will give you a trade, a sell climax trade. But for now, do know that volumes on the way down can be, and in many cases are, lower than on the way up. This is something that you as real world trader needs to know. Do listen to the voice of reason. On this optimistic note, I bid goodbye to you, not before reminding you to click like on this video if you liked what you saw. Subscribe to my YouTube channel if you haven't already done so. And I would love to hear from you in the comment section about all the feedback that you have about our work. Help me reach out to fellow like-minded smart traders like yourself by referring my video to your family and friends. Thank you for your patience. Till we meet again in my next. This is Vijay Bhambwani signing off for now. Have a very, very profitable day. Bye-bye.